I have put my presentation on the screen. Is that visible to you, at least Chetan and Manoj?
Yes, it is visible to us, and you're coming loud and clear.
Great. Okay, great. Thank you. Thank you. So,
actually, Chetan
good afternoon, everyone.
Okay.
Hi, Deval. Good. Thank you. So, good afternoon, everyone. It's a pleasure to address you all through this webinar. I've put a presentation here for, it's not too many slides. The objective is also to discuss with you all and to tell you all what we are doing, how we are doing, and also to maybe share with you how we are using the audit time software called Pentana. So that is the plan. I can only tell you, if I just sit back and think about my whole audit life, probably what we are doing in Indus Towers is really the highlight of my internal audit part of my life, because I think internal audit as a function has gained a lot of respect and a lot of credibility in this organization. So that is why when I was requested to do a session with you all, I thought this session I can probably do with a lot of confidence and a lot of conviction myself. So that is about the session. I will just, I think this slide is probably a repeat for all of you all. I'll just let you read it for a minute, and Manoj has already presented my credentials to you all. So I think the headlines for me here is that I'm not a career internal auditor. I have actually come to internal audit more by default when I was moving from Bahrain to India within KPMG. So within KPMG, at that point in time in 2004, the demand, or I would say the risk advisory practice of all the firms was growing in a very swift stage, and I think the request for me was to consider moving out of statutory audit and IFRS and all that into risk advisory. And I think I just took it as a challenge, and I said, let me take this challenge of internal audit. So I spent 1 year in Mumbai with KPMG in India, and then they requested me to set up the internal audit practice in Pune. So probably that was the highlight of my KPMG stint, because I set up the practice there, and by the time I left, we had some 20 people in KPMG internal audit in Pune. I'm getting some message, so let me see what to do with this. Okay, fine. In terms of professional qualifications, what you would see is that I have got all qualifications other than a CIA, and probably that also reflects the fact that I'm not a career internal auditor, and I probably don't intend to do CIA as well. Just wanted to share that with all of you all. Coming to Indus Towers, I just wanted to give you all some perspective about Indus Towers, because it is not a company that is really well known, because we are a B2B company. So we are a joint venture between Bharti and Vodafone and Idea. I'm just trying to see if this webinar is still working. Yeah, it is. So we are a joint venture between Bharti, Vodafone and Idea, and Bharti and Vodafone have an equal share of 42%. Indus was formed in 2007, and at its birth itself, it was a company with 70,000 mobile towers. So this 70,000 mobile towers made it actually one of the biggest companies in the world. And we still continue to be the biggest mobile tower company in the world. We have a presence in 16 out of the 22 telecom circles in India, and I think that map gives you a good idea of what our size is. We are a 14,000 crore company in terms of revenues, and we have around 2,000 employees on roll. And I think we have a huge vendor and off-roll network of at least around 10,000 people off-roll who are helping us in our operations. So what does Indus Towers do really? Indus Towers is a telecom O&M company, that is operation and maintenance company, telecom infrastructure. So we build and maintain and operate the towers on behalf of the telecom operators. So so that makes us a B2B company. We don't directly interact with the consumers of Airtel or Vodafone or Idea, but all our customers are only the 12 or 13 telecom companies in India, out of which some of them are already disappearing as we speak. So that is some message about Indus Towers. I thought it was important for you all to understand that because that will give you a perspective of some of the other things that I am going to say. In terms of internal audit and assurance at Indus, in terms of the audit deliverables, I think we do around 130 deliverables in a financial year, which is spread across these 16 circles and 13 functions in our corporate office. In addition to which we do various scrap reviews and other projects. Indus Towers is a very good example of a co-sourced environment for internal audit, wherein we have a fairly large, I would say, internal audit team size on rolls of Indus Towers as well. So that's around 10 of us, and I think there's an organization chart of ours which is there in the subsequent slides. But we have 5 people in the corporate office, and we have 4 people, 1 in each region, north, east, west, south. And the overall responsibility rests with me. So I am the Chief of Internal Audit and Assurance. I report to the CEO over here, and I also meet the Audit Committee Chairman, who is Mr. Akhil Gupta, once every quarter. I am not sure if you followed the news yesterday night and today morning, but Akhil Gupta is actually the, if I would say, the de facto number 2 in the Bharti group after Mr. Sunil Mittal. So he's a veteran in the Airtel as a company, and he's actually one of the brains behind creation of Indus Towers. So he's the audit committee chairman for us. We work with various audit partners, but it's primarily Pricewaterhouse. KPMG are our stat auditors, but we do some other assignments with them which don't conflict with their stat auditors work. That is mostly in the advisory or IT consulting space. We do some small assignments with E&Y as well, and Mazars and TRC are 2 small firms that help us in some remote audits in some remote locations. So basically, whatever I'm talking about internal audit life cycle, it cannot happen without these 2 boxes. So one is my team who are on rolls of Indus, and the other is the audit partners who are working with us over the last 3 to 4 years. So I think this slide is not a surprise to you all. What are the elements in the audit life cycle? So there's planning, there's field work. I have tried to not do too much talking about the field work, because that is something which PwC or Protiviti or one of those firms do. But I'll be talking a lot about scoring and reporting and how do we gain traction or how do we gain more visibility as a function within the organization. So I think, and that's why I've done a loop between scoring and reporting and action taken report, because we continuously keep following up with the people on closing the audit points, and we give them some scores. So you'll see some details about that, because if you ask me, that is what helps internal audit gain visibility and gain respect, if I would say, in the organization. Moving on, so this is the slide. So audit planning per se is a very big activity for me and my team in the corporate office. I can tell you, as we speak, we have already started planning for the next financial year. There is a huge exercise that we undertake, and I've obviously not shared all those templates here, but we start with our learnings from the previous financial year. So both me and my team and the PwC team, we sit down and we see what are our learnings from the previous year in terms of audits. We do huge number of interviews with management that you see in the middle. I think if I'm right, I've just signed off the current schedule of interviews. I do some 40 interviews. So 40 interviews of 1.5 hours each. So I spend around 60 hours trying to understand from management what is their focus, what is their concern, what is their need of internal audit during the next financial year. I also do the same discussion with the statutory auditors, which is KPMG. We begin all of that, as you see the base, it is the previous financial year's risk assessment. So each of the 16 circles, we do a risk assessment, which is a typical thing that all of you all would be doing in terms of the likelihood of occurrence and the magnitude of impact. So we have the first quartile, second quartile, third quartile, and fourth quartile risks in terms of functions, in terms of circles. We do these discussions with various stakeholders. We align them with the key financial controls. So we have a list of 10 key financial controls that we have to have as an organization. And they are all the standard things in terms of segregation of duties, delegations of authority, the whole purchase to pay process, vendor governance, ERP, IT interfaces, etc. So we align those as well. We look at the results based on which we make the audit plan. So all that I will say is what you're seeing in one slide over here is actually the results of work of 5 of us in my corporate office over at least 1.5 months. So the elapsed time to do this is actually 1.5 months. We actually even do one-on-one meetings with our audit committee members, representatives. So since our audit committee has people from Airtel and Vodafone and Idea, we even do a one-on-one meeting with them to try to understand what is their inputs for the next year, because they are our shareholders and they represent us in the audit committee. So this is something we do for the audit plan, and what you will see in the next slide is actually a sample of the audit plan itself. So as I said, we break them down by function. So within function you will see some line items, energy SBU, there's some line items, SCM is supply chain, there is some line items, next is finance, there are some line items. So what we identify then is, are we going to be doing it in circle, are we going to be doing it in corporate, which quarter of the year will we be doing it in, and the total of this is what you saw in the previous slide, which is this in terms of total number of audit deliveries out of this plan is 130. So the planned audits are something which is then circulated to the whole company or to the relevant people in the company saying, guys, this is what we are going to be auditing this year. So there is enough knowledge, enough information shared about what we are going to be auditing. What I only don't share, and probably all auditors like to keep a surprise element in their work, is which circle I will be auditing. So if you look at this particular slide, if you look at the first example, it says Master Battery Revival Center. It only says circle and corporate. So I don't, out of my 16 circles, I can pick up any circle to do the audit, because that is something I don't want to plan in the beginning. But how I do that is, again, during the audit or as the audit starts, we again sit down with the concerned people in corporate, and we find out from them which is the circle to be covered in this particular one. And again, as an auditor, I'm not a true blue-blooded auditor, so I don't go to all the bad circles only, because we have to also give a representation or a feeling of comfort of the whole company to the external stakeholders. So if I have to do 3 circles, maybe I take 2 circles which are really bad, which are having a lot of problems, but I also take 1 circle which is supposed to be really good, because then what happens is I'm able to share the best practice of this circle which is really good to the circle which is really bad. And when I come back to corporate and I do the meetings with corporate, I can tell them, I can give them a 1 slide which shows them how the 3 of them are performing. What is the relative performance of the 3 of them? I think that is something which even my corporate team finds very useful in terms of sort of benchmarking each circle against the other. What I will move on to is after this plan, what happens. So this comes to the typical audit fieldwork that happens in Indus. And you see these boxes here, but I can tell you we have made these boxes so tight and so rigid that it is part of the DNA of not only the auditors, but it's also part of the DNA of the auditees. So when the auditees know that first I will get a scope, they will sort of discuss the scope with the internal audit team, then there will be a kickoff meeting. The kickoff meeting is a meeting held between the corporate people, the circle people and my team and the PwC team to again agree on the scope. So one agreement on the scope is between me and the auditors because I tell them what is to be audited. The second agreement on the scope happens at the kickoff meeting where the auditees know exactly what is to be audited. Yeah, what is to be audited. And I think there is something called an RCM, and I will come to what an RCM is. It is actually a risk and control matrix, and the subsequent slides just give me a second. Yeah, there is a huge amount of execution that happens in the corporate office itself. So we don't let the auditors go and hit the circle before taking all the data from the ERP system or some other system, doing discussions or understanding that data with the corporate team. The execution is something we do at the circles. As I explained, we have 16 circles all over India. After the execution, we have something called a pre-exit at the circle. So before the auditors leave the circle, they actually discuss and agree their audit findings. It's not a proper report per se, but it's more of a discussion on the audit findings and the recommendations. We then compile them at corporate because we do the audit at 3 circles. We do a pre-exit at corporate where we again align the stakeholders in corporate that this is what we saw in Tamil Nadu, this is what we saw in Kerala, this is what we saw in Bengal. And then we do a final exit meeting in corporate. A final exit meeting is actually something which I do with literally the senior vice presidents and the vice president. So a final exit meeting is something which has, typically a final exit meeting would have at least 3 to 4 vice presidents sitting in the room, discussing the report and agreeing the action plan, after which we release the report. And I will come to the report per se in the subsequent slides. So I mean, I have talked a lot about our planning approach and I have sort of given you a glimpse about our fieldwork approach. I just wanted to maybe ask some of the panelists or some of the attendees, do you have any question? Is there something that is striking you which is very different and which you would like to discuss with us? I'm sort of just opening it out for some questions with the attendees.
Yes, this is Manoj. We have a question from one of our participants. Our participant would like to understand how you select the outsourced partners.
Okay, good one.
And then the next question is, once you carry out the interview with the management person, so are those factored into your the audit priorities?
Okay, yeah, I'll answer that. Sure. So let me take the first one. That's a very interesting question, and I hope the person who's asked it is not from one of the firms, because I'll be sharing something which I shouldn't be sharing then. Okay. No, I think that's a very good question because that's something we spend a lot of time on in our audit planning process. The good thing about it is, Indus is a joint venture, And one of the mandates, or rather the only mandate I have from the audit committee, is that your main auditors have to be a Big Four, right? Which means KPMG, PwC, Ernst & Young, and Deloitte. As luck would have it, Indus is a material subsidiary or is a material associate company for both Airtel and Vodafone. So their statutory auditors cannot audit Indus for internal audit. So the statutory auditors of Bharti Group is Ernst & Young, which is SR Bartley Boy and Company, and the statutory auditors of both Vodafone and Idea are actually Deloitte. So both Deloitte and Ernst & Young get disqualified from doing an internal audit in Indus, right? And KPMG is our statutory auditor, so obviously KPMG also gets disqualified from doing statutory audit in Indus. So what then gets left behind is PwC, and PwC fortunately does not have any conflict. They don't do any statutory audit work in any of my shareholders. So by default, we have started with PwC, and this mandate came to us only in 2010 after I joined. Before I joined in, so first 2 years of this organization, 2009 and 2008, it was some sundry audit firms doing it. It was, if I can use the phrase, trial and error at that stage. But now we are very clear that we do bulk of our work with Pricewaterhouse. And we have, as you saw on that slide, we also do work with a couple of other smaller firms. And that smaller firms are, again, something which I have been working with for the last couple of years. We've developed a certain relationship with them. What we do is we give work, if it is based on specialization, to where I see the specialization. So as I said, I also do some work with KPMG, who are my statutory auditors. But we do work with them, say, for IT advisory, for disaster recovery planning, which does not conflict with their stat audit. We do work with some, say, Ernst & Young. We give them some IT work to look at our applications and controls in the Oracle. There are certain other work which we do, which is purely, I would say, transactional in nature, where we don't want a big brand name, but we want a lot of depth and a lot of transactional checking to be done. That is where we use audit firms like TR Chadda or Mazars or something. And as we speak, we are also doing huge amount of scrap disposal all over our country. And the mandate that I have received is internal audit should sign off every scrap disposal that happens. So which means I need a lot of young boys and girls who are out at my warehouses, making sure that what is getting scrapped is what actually should only get scrapped, and no good material is getting scrapped. Now, I don't need a big brand for all this. I just need a lot of bodies. So that's when I use certain other audit firms to do this work for us. So I hope I've been able to answer the first question. The second question is a good question, because I think you're trying to ask me that we do interviews with all the 40 people. And do I factor each and everything that each of the 40 people say? Probably not. The interview is to get a sense from the people as to what is it that they think should be audited. But you know, audit time and audit resources are scarce. I cannot be doing a wish list of audits just because 5 people wanted it. So we go through a calibrated process. We do these interviews. We then discuss. Obviously, we have a CFO who is the biggest stakeholder of audit, and the CEO, and then 3 of us sit down and see. Okay, let's see how all this works. Finally, again, we sit down with our audit partner and say, this is the audit calendar for you all. What is going to be the costs for the next year? So it's not only a factor of what everybody is saying has to be done. It also is a factor of the leadership view, the audit committee view, and last but not the least, the commercials that are there. But let me also assure people that if during that interview itself I think that there is something which is coming just as a laundry list with no real backup or no real rationale, then I tell those people then and there that, you know, okay, you may want me to check maybe B class or C class procurement, but why do you want me to check C-class procurement? What is the risk that you're seeing in C-class procurement? And then when I get specifics, so as we speak, in fact, I have done a C-class procurement audit in one circle, and guess what? The suspicions of management actually turned true, because we had some issues in the quotations and some false quotations coming into the system. But that we do on a real exception basis once we are very sure that everybody in the system, everybody as in the relevant people in the system, are agreeing that there is a merit in doing this C-class work. Otherwise, we do C-class work or D-class work only once in 3-4 years, just to get some comfort. So I hope I've answered that question satisfactorily. Are there any other questions, or should I move to the next slide?
I think you can move to the next slide. We will take up as and when the questions are there, and we will take up the balance question at the end of the session.
Okay, sure. Thanks. So this slide actually then I'm going further in terms of how is it that we do our scoping, what is it that we do once we start the audit or when we are going to start the audit. So as I said at the outset, Indus has certain key financial controls. So what you're seeing on the top left is a sample of a scope document. So at the beginning of every audit, so say this is a fixed assets audit, we say that what are the key financial controls that we want to check in this particular audit. Then the second box that you see in that is which are the IT applications that will be covered. And as you see, there's a huge laundry list of IT applications that we cover. What are the common areas for coverage in terms of adherence to manuals, processes, provisions, etc. And I think again the expectation here is at the beginning itself, both my team, that is the Indus internal audit team, as well as Pricewaterhouse or whatever, are very clear on what is the key focus areas for this particular audit. Now, if you see the example at the bottom right, that is actually the detailed scope document itself, which goes, as I said, to every concerned auditee before the audit starts. So it says what is the area of the scope and what is the risk perceived in that particular area. So it is not that I'm picking up a particular area where there is no risk or where there is a low risk. I'm picking up those important areas for the organization and I'm telling people I'm doing this particular part of the audit because it affects this risk of the entity. And this is then discussed at length in the kickoff meeting. So people then say, okay, why are you doing this? Can you include this? Can you exclude this, etc. On this slide, I had talked of this thing called RCM that you see on the right side here, which is a risk and control matrix. So I will go to this risk and control matrix. It looks something like this. So for every audit, before the audit starts, we have a risk and control matrix which is well defined, which is pre-populated. And I'll just sort of highlight some of the areas here. So which function or process are we reviewing? What is the objective? Which category of objective are we trying to do? And best thing is we look at it from a COSO perspective. So objective category is which control objective are we trying to establish from a COSO perspective. We describe the risk. The auditors then describe the test title. They give a title to it, and then they detail out the test in terms of what is the detailed test that we are going to do. Again, which type of test, manual or automated. And last but not the least is what is the severity, high, medium or low. So this is something we keep ready before the audit starts. In fact, in Indus, because audit and audit scores are so relevant and so important, there are certain functions which also demand to review the RCM before the audit starts. So we share this RCM with them transparently prior to starting the audit. Why I'm emphasizing this again and again is, I think the more transparent and open we are as auditors, the more welcome we will get when the audit is happening. So just assume that this RCM had, at the inception of the audit, it had 12 high risk, 30 medium risk and 8 low risk points, and these are, as it says, inherent risks which we define at the beginning of the audit itself. Right? Now with this RCM and with this scope document, we leave the auditors on the field to do the audit work, and we sort of maybe I'll just skip this slide. Let me take this slide itself, and then we end up with an audit report which has, so as you saw here, 12 high, 30 medium, 8 low, right? So you'll see the same 12 high, 30 medium, 8 low. So totally 50 risks were defined at the beginning of the audit for, say, supply chain purchase audit. There are weightages assigned to them. There's a score that is given here. Now the actual report that was finalized after various discussions may have had 2 high risk observations, 7 medium risk and 3 low risk observations. That means there are 12 observations. Then as you can see here, it's a simple arithmetical calculation to say that their compliance score is actually 79%. So this auditor or this auditee gets a score of 79%. But hang on, what we also saw was that there were certain high risk points and medium risk points which got repeated from the previous years. So we penalize them for that, and we bring the score down to 71%. So what was 79% at the beginning comes down to 71 because of certain repeat audit points. So if you actually look at the report, or if you look at how the scoring will work, is they started as you saw with 71%. Every quarter on quarter, we do something called ATR. ATR is nothing but action taken report. So this action taken report, this 2, 7 and 3 is being tracked. So the 2 and 7 is tracked till detail, till its depth. We don't track low risk points, and that's a subject of debate in my team as well, that should we be tracking low risk points or no. But we track all the high risk points and medium risk points till they are closed, quarter 1, quarter 2, quarter 3, quarter 4. As and when the points are implemented, this is how the score goes up. So 71%, which was the audit score, becomes 74% when they implemented, as you see here, they implemented 1 point in high and 4 points in medium. 74 becomes 80 when they implemented 1 balance point in high and 1 point in medium. So 74 becomes 80, 80 becomes 85, 85 becomes 90. We don't allow the audit scores to go more than 90 in Indus, because I have told my CEO and CFO that audit score can never be 100, right? Audit is a sample, audit is sample based, audit is not 100%. So it is incorrect to give a 100% audit score. The good thing about this scoring is this is something which is consistent. We've been following year on year. So we have not changed anything. It is always comparable, and it is transparent in terms of the scoring methodology as well. Are there any questions on audit scoring? Because this is something that I think is a major factor in Indus. Actually audit then also becomes a numbers game. So audit score that you see here for one audit, for the whole company also there's an audit score, and the audit score is actually a KRA item for all the 2,000 people. So all the 2,000 people in Indus, so the company scorecard which the board is determining has audit as a significant element in the score, and this is something my CEO tracks for the whole company month on month. So are there any questions on the audit score and the audit scoring and all that? Yeah, are there any questions on the audit score? In fact, I can see another question here. How do you decide the priority of the audits to be carried out? That was a question. Yeah. So I think, yeah, Manoj.
Yes, you have taken up this when you have answered the question on
Okay.
for by answering that it is for the sense check, the interview that you conduct.
Right. Right. Yeah, but once you put everything on our audit plan, then there is no priority. Everything is 100% priority. Everything has to be done. So for me and my team, our KRA is 100% delivery of the audit plan. If I don't deliver that, I don't get my rewards. Right. Do we have any questions on the scoring and the methodology?
Yes, we have a question. How is the weightage determined to be allocated on the scoring?
Okay. Can you just clarify what do you mean by weightage?
See, we have given weightage in the earlier slide, the
Yeah.
column B and the column
Yeah.
I.
Yes. So I'll take that. So weightage is very simple because I mean earlier it used to be 3-1 when I joined the company, but then 3-1 is actually doesn't differentiate between a high risk and a medium risk. So we wanted a much bigger differentiator between high risks and medium risks, which is why we made high as 10. So if you get a high risk point in an audit, it is actually going to hit your audit score much worse than if you get 2 medium risk points or 5 low risk points. So I think that is the method we used when we came to the weightage in column B. And there is absolutely nothing sacrosanct in it. As I said, it can be 3-1, it can be 5-3-2, it can be 10-5-2. It all depends on what the organization is seeing as risks in its business. And coming to the other question about column I, the 3 and 2, again this is more of a sort of penalty that we wanted to give, that if your score comes to 79% but there are certain repeat points, why don't we just sort of penalize the people by reducing the score. So again 3 and 2, it can be 5 and 3, it can be 10 and 5, it can be anything. It is more, the second part is more as a deterrent to make sure that repeat points do not come. Yeah. Okay, I can't see any other questions, so let me move on.
What I will do, I will at the end of the session, I will give you the questions, so maybe you can take up at that point of time.
Okay, sure, no problem. Right. I was actually expecting this question, but people did not ask, so this is the answer actually. So we actually have a detailed risk writing criteria, both in terms of financial losses as well as operational losses. We have put a threshold here. I'm putting the cursor there. That to me, in any audit, in any circle, if a single high risk point has a financial impact of more than 60 lakhs, that is something I would put as high risk. And the question could be, how did you arrive at 60 lakhs? We arrived at 60 lakhs after looking at our company's P&L, after looking at the number of audits that happen in all the circles, and after looking at what is the materiality level of a high risk issue. So basically 60 lakhs, and in a year I get some 20 to 30 high risk issues. So 60 lakhs into 30 or 60 lakhs into 40, how many ever high risk issues I get? If I aggregate all of them, and if I put that as an adjustment to my financial statements, that adjustment would be a material adjustment. And that is something I signed off with my statutory auditors as well, that this amount, if there is anything more than this amount in the financial statements, it would be we'll have to change the financial statements. So this is where we came to this 60 lakhs. And there are a lot of other, as I said, areas where things could be high, and we've sort of put them out here. This is also there in every report. so that when people ask why did you put this as high or medium, there is this thing which is clearly defined. I think one thing I would like to highlight in this is, if you can see this, that you know auditors like to check transactions, and every transactions give exceptions. But we said that we would put it as a high risk only if you find non-compliances more than 20%. So if I take a sample of 100 and 20 samples have a failure in terms of the audit test, then it could be a high risk issue. Anything between 10 to medium is 10 to 20 is a medium risk issue, and any thing where it is less than 10% non-compliance is a low risk issue. I think this is also something which helps me a lot when I do my risk rating in an audit report. But there are things like fraud, regulatory compliance, brand, reputation, ethics, where obviously I don't go by all those criteria. For me, fraud is fraud, whether it is 1 rupee or whether it is 60 lakhs or whether it is 20% of the sample. It is fraud. Same thing for regulatory compliances. Regulatory compliances where we say that there is, if there's something which is only in the nature of a fine or a penalty which is less than 10 lakhs, I leave it as a low risk. But if there is something which could be prosecution or criminal non-compliance, criminal procedures, we put that as high, irrespective of the amount. So just for example, if there is a problem in our vendors paying PF to its contract labor, we put that as high risk, even if it is a 5 lakh issue. And what we also have here is something like this, implementation assurance. So there was something which came as a medium risk issue last year, and the same issue is coming this year. I actually take it as a high risk issue. So I escalate the audit risk rating if there is a non-compliance. So actually, or if there is non-implementation. So actually the process owner gets hit twice. He first gets hit because what would have been a low risk observation by its own, if it does not get implemented, it becomes medium risk observation. And in that audit scoring, as you saw, there is a reduction, his score gets reduced. So we are focusing a lot on implementation assurance in this company rather than pure audits. So this is how my audit report looks like. This is something, and this is the snapshot, the first page. This is something I issue to all my stakeholders. When I say my stakeholders are the management committee of this company, which has each of the functional heads and me as well. All the people who report to the CEO. And it is also marked to the respective corporate functional heads. So if I'm doing an audit in purchasing, there would be a corporate purchasing head, all India, it would be marked to him. It is copied to all the auditees. All the people who are involved in the audit are only in the copy. This to me is a very important thing, is because I am not giving my audit report to the people whom I audited. I am giving it to the people who are charged with risks and controls and governance in this organization, right? So this is, as you saw in the slide on the RCM, the 79%, 8% and the 71%. Then we have certain report rating criteria, good, satisfactory, etc. So this comes in satisfactory. You saw the RCM, it had 2, 7 and 3. And we give some details over here. Obviously I have not put the details here because of confidentiality. But this is the snapshot of the audit report. So this is when my mail goes out, this particular section is on the mail. So the senior vice presidents, the CEO, the CFO, they do not have to read anything other than what is there here. The objective of this is that all the relevant information which will concern a CXO is there right on the top of the page. If I move on, this is how every issue looks like in my audit report. So obviously there's an observation title, and I will not do a session on audit report writing because I think that can be a separate discussion itself. So we finalize the issue here. I tell them what risk is. So is it financial, operational or strategic? We do a lot of root causing to understand what is the root cause. Is it the organization design, the way we are structured? Is it the operating design that there's something wrong? Is there a problem with the people? Or is it a problem with the technology? Because as I said, we have huge number of IT applications that are running, working with each other. Very clear recommendations based on best practices. I think this is something I would like to highlight, that for every high risk observation, we don't only ask for an incident solution, we also ask for a systemic solution. So the incident solution is the fix, it is the band-aid. So there was a fire somewhere over here, yes, I will fix the fire is what he says. But the systemic solution is, how does he prevent the fire from happening again? And typically these systemic solutions are provided by senior management, they are not provided by the junior management. Coming to Pentana, because this is something we use with Audit Time, and Deval, who is here, has been helping us with this for the last 4-5 years. After every audit has been completed, we actually put the report in Pentana. Ideally, we should be doing the audit itself in Pentana, but because our audits are being done by PwC, it is not very efficient to do the audit through Pentana like the way it would happen. But we define our audit universe and all that, and then we put all the reports in Pentana. This is very, very essential, because at any point in time, I have around 400 open audit points. And for me to track it, it is impossible to track it using an Excel spreadsheet, because I'm tracking it with almost 200 auditees at any point in time. So this is where Pentana comes and helps us to automate the whole action taking report process. So we report this, we upload this on Pentana, and I'll come to the action taking report process later on. So what do I report to audit committee as far as my internal audit is concerned? So this is the table of contents of my pack to the audit committee. So surprise, surprise, we don't do a presentation to the audit committee. Audit committee says, you guys are internal auditors. Just like you give an audit report to the management, you give us also an audit report telling us all the important things that we need to know. So the first thing that we've highlighted here in the red is audit completion status and the risk categorization. So this says that which are the audits that we've completed. This green means it's fully completed. What is the rating? And how many high risk, medium risk, low risk points? What is the score? What is the deduction, etc. Similarly, we also report on the ATR, action taken report summary. I'll just read this out because it may not be very visible. What it says is, this is high and medium. How many open observations were there last quarter? How many observations have got added for the completed audits? So total number of observations are this. How many observations got implemented during the quarter, which is this, and hence what is the balance amount. So for the balance also, for the high risk, the 17 that you see here, we give a detail by audit, what is the 17 and the aging of those, and we actually give them the details. There's a lot of English and a lot of text about what is the detail, that why is this point remaining open. Similarly, for the 104 medium risk observations, we tell them what is the aging of those. Sorry, it's not 104, it's something else. What is the aging of the 61 medium risk observations which are still open? Last but not the least, in Indus, as I said earlier, everything gets converted to a score, including audit. So the audit scores are also something which is tracked and published like an MIS, like any other MIS in this company. So this is the function-wise pre and post ATR scores. So basically, there is you'll always see the green bar to be bigger than the other bars, because the green bar is the post ATR score. So when the audit got completed, if I see this is site acquisition, the audit score was 71%, but in the next 2 to 3 quarters, they have implemented the points and they have taken it up to 83%. Similarly, if I look at circles over here on the right, this circle is Mumbai, since all of you all are from Mumbai or Pune. Mumbai, the audit score was around 65% or 70%, but in the 2 or 3 quarters that they got to implement, they have implemented their points and the score has gone up to 83%. This is what I think our management as well as audit committee, they get a lot of comfort by the fact that not only are audit issues highlighted, they are also closed and tracked to closure. So that is why I am showing this slide. It's more of a sample just to give you, and this particular thing which goes to the audit committee on a quarter-on-quarter basis, goes to the management committee of this company on a month-on-month basis. So every month this is tracked because, as I said, internal audit is a scorecard item for the company as a whole. So this is the reporting to the audit committee that we do. This is the ATR. So action taken report, as I said, is something which is very critical in Indus. There's a very big slide over here. I will just leave it for you all to read it. The only message here is, after every audit, between 30 to 45 days, we actually send the auditors again to validate what the people have done. And what the people have done, how they have closed the point, they actually put it in the Pentana system saying that this is how they have closed the point, or it was open. If the point remains open after the PwC validation, it goes into the self-certification mode. In the self-certification mode, again, every month, every quarter, there is a trigger that goes out to all the auditees saying that this point is open. In fact, we have developed with Pentana a very detailed matrix by which it even gets escalated to their manager and to the manager's manager. So much so that I have seen mails that even go to the CEO of this company that this audit point is open, why is it not closed? So based on the results of the validation, either through PwC or through self-certification mode, the points get closed, and that is how the post ATR score is arrived at. This is something which takes a lot of time and effort and a lot of chasing, which is where the automation through Pentana has helped us a lot. This is actually how the Pentana dashboard looks like in terms of open or closed or whatever. And this is actually a dashboard from Pentana which is circulated to my team and to PwC saying, for these audits, for these auditees, there are so many points which are open, replied, not replied, high, medium, low, etc., etc. So there's huge amount of MIS that we get and which we use to chase people to close the points. So that actually covers the audit life cycle in Indus. I just wanted to spend a minute or two on some of the other things or what is the role of the IIA. There are 5 or 6 people in IIA, internal audit and assurance. What do we do? Because the fieldwork is done by PwC or ENY or whatever, but the scoping is completely my responsibility, my and my team's responsibility. All the kickoff mails are sent off, as you see here, 7 days prior to the start of the audit. Very strict standards we've got in this. RCM is finalized by us. It is prepared by PwC but finalized by us before the audit starts. During the audit fieldwork stage, we become more of a coordinator. We only coordinate between the auditor and auditee, and we sort of look at the reports and the points that have come out. We do a lot of exit meetings, and it is the internal audit on-roll guy's job to make sure that these exit meetings happen. In fact, it is also his or her KRA to make sure that these exit meetings happen, because it's actually a big struggle sometimes to get these people. And the audit committee report, which you just saw some glimpses of, is completely prepared by me and my team. So in addition to internal audit, what else do we do in Indus? So what you saw here, I gave you the glimpse of was the functional audits and some of the Circle Limited reviews. As I said, in addition, we do concurrent audits with some firms like TR Chadda and Company. We do special audits with some firms like Mazars and Company. And there's nothing, I mean, it can be any firm. It's just that today it is Mazars or TRC. In addition, we do a lot of other work for our organization, which is led by internal audit. One is enterprise risk management, as many of you all would be doing. We are the facilitators for ERM in this company. Me and my team have been responsible for writing, launching, and certifying on the code of conduct. So we have an annual certification now as we speak, but in the last 2 years, we have literally written the code of conduct. We have done trainings, we have done online trainings, we have done online certifications. So every year now, there will be an online certification on the code of conduct, which we are anchoring, internal audit. And we also do huge amount of continuous controls monitoring, which means just developing reports from ERP, from Oracle, in a simple user-friendly manner. So I can just give you an example. purchase orders raised after invoice date, or approvals not happening as per the hierarchy. Some of the things my team is continuously reviewing based on their, it's just a report which is sitting on their computer. They don't have to spend a lot of time on it. And we do a lot of special projects. Why I'm saying all this, people, is that this part, the right part of this slide, cannot happen unless the left part of this slide is happening well. Our core function is internal audit, and this audit life cycle, the way we are managing it, the way we are engaging with all our people in our company, it helps me and my team to also get into various other value adding projects. I think that is the only reason why I wanted to put this slide up. And with this, I would actually want to open it up for suggestions and comments.
Okay, Vinod.
Any questions, we can take them.
Yes, Vinod, we have a question from one of the participants, which is what are the most noteworthy benefits of using a audit management solutions like Pentana in the audit lifecycle management?
Okay. So I was trying to do that even while we were speaking, but to me, if I have to just give you one headline, it is that I have around 300, 400 observations at any point in time, and it is just impossible to track these points without an automated system. And I think that to me is the biggest noteworthy benefit of Pentana, because we have those email triggers, we have those dashboards, we have easy access and easy readability of the report. So in fact, I have recruited one new guy to take care of internal audit in North, and he tells me that, sir, every morning when I come, I open my Pentana dashboard to see how many open points and closed points are there. So it has become the way of life, not only for the internal audit team, but even for PwC and even for my auditees, because the moment they see us, they actually say, oh, I remember I got a mail from Pentana and I need to close that point. So it has become the way of life of doing action taken report, follow-up and closure in Indus Towers.
Okay. Then we have a question which asks, is it viable to add up new area of audit during the course of audit?
Yeah, excellent question. Excellent question, and I think to me that has been one of my, if I can say, the success factors, because all this fancy stuff that we do, audit planning, risk rating, risk categorization, audit plan discussions, and all that is fine, but I think it is always important to keep a 20% cushion in your audit plan for doing special audits or audits that come during the year as a request from the business. Because when you get a request from the business to do an audit, that itself is a vindication of the internal audit function or its credibility in the organization. In fact, this year as we speak, I am actually under severe stress, me and my team, because we've taken up more number of unplanned audits because there was a business requirement to do that. But as I said, just because I do unplanned audits doesn't mean I give away my planned audits. So the audit committee expects me to do both. And this year I have done at least 2 or 3 of those which were unplanned audits coming as requests from the business. I would not use the word viable for it. I would say if you get a request for doing an additional audit during the year, you must take it up as a challenge. You must take it up as an invitation to sit in the boardroom, sit with the CXOs and discuss it, because there is a reason why somebody is asking you to do it. As long as you are convinced about the reason and its genuinity, it should not be that somebody says, oh, can you do an audit of this because I don't like this person here, or I want to get rid of this person, so just find out all the things. No. In fact, I've got various requests, not obviously so direct, but when I think about it, I know that it is more about a personality issue or some other issue. I say, no boss, you please tackle your issues on your own. I don't think you need an audit to do this. But when I get a request where I can see there's a lot of value in doing this audit and sort of finding out what is happening on the ground, I actually have taken it up and I take it up with a lot of happiness. So it's not a question of viable at all. If you ask me, maybe I should bring down my planned audits to maybe 70 to 60% and keep around 40% for these additional audits, because they really help me get traction with the management and the board.
Then we have a question which asks, what if internal auditor come across a fraud in an area and at the same time which has a compliance score of 90?
Good one. I think in the last 3 years in Indus, I think there are only 1 or 2 areas which have got a score of 90, and that is around segregation of duties in ERP in terms of the role-based matrix and all that. And because that is so sensitive, and because the score is 90, we actually audit it now every quarter to see that has things happened which shouldn't have happened. But it has not come till now that we have had a fraud in an area where we think it's very, very well controlled. But if at all does happen, unfortunately, then obviously my next year's rating and my next year's risk rating, risk prioritization would completely change. And most importantly, I would lose a lot of faith and credibility from my stakeholders who will say that, yeah, on the one hand you gave it a 90% score, on the other hand there was a fraud there. So I think the biggest reflection on that will be on us. Although whatever we can say that, internal audit cannot detect frauds, it cannot prevent frauds, all that thing, the theoretical thing which we will say, which we learn in the books. But finally, if there is a score of 90 and there's a fraud, it's a big, big problem. Yeah.
Okay. Then no. See, a question has been asked. One of the participants wants to know, since we are using the audit solutions for post-audit reporting and follow-up, so is audit program and fieldwork is getting monitored?
Yeah. Yeah, it is getting very much monitored, but it is getting monitored through the big 4 agencies and through our process. So we actually have a very strong process of sitting with PwC and the other audit partners every week for 1 hour, because at any point in time there are 10 audits that are happening in maybe 15 circles. So it is very important to have a very robust monitoring process. In fact, today, I don't know, let me just let me not talk theory, let me show you practically. I'll show you my calendar for today, and you will see something called a PwC weekly meeting. So every week me and my team meets with the entire PwC team for 1 hour and discusses the status of the audits and what is happening, what is not happening, etc. But let me clarify here, I do not get into their files and their paperwork, because that to me is not right. We should not be getting into their paperwork, because then you are not relying on them. Can you set it up next? Yeah, I can. Yeah.
So now the bulk of the you use the co-sourced the audit partners. So they also present their reports to audit committee,
Yeah.
or it is through you the audit report goes to the audit committees.
Yeah. I think there's a lot of I think all audit firms are generally they get too worked up about presenting to the audit committee. So as I said very clearly, the audits are done by my guys, my co-sourced auditors. My audit committee report is done by me, and we get them to sign off saying that they agree with whatever is presented in the audit committee report, and we even invite the PwC senior partner to come and discuss some of the key issues in the audit committee.
Okay.
I think it's just that, it's nothing more. So
okay. Do we have time, or do you want to continue? We are beyond our time.
I can take, I don't know if there are one or two more questions. I'm happy to answer them. No problem.
Okay. See, this is on the fraud risk, are we considering fraud risk during our audit plan finalization, and if yes, then
Yes.
how we do that?
Yes. Okay, so good question. In fact, if I go back to this slide where I said how I do my audit plan, there's actually a very big Excel template for all those 13 functions and whatever 70 sub functions, and fraud risk is one factor which is included in that template. When I do my interviews with my 40 people, I ask them what do they think of fraud risk. I obviously give them what I think of fraud risk in that particular circle or particular function, and we capture that. But I know it's not a theoretically right thing to do, and next year we will also be doing a complete fraud risk assessment in Indus Towers. Just like we do enterprise risk management, we will be doing fraud risk assessment as well. Yeah.
Okay. Now I have a very interesting question. The Indus Tower is a part of the telecom. So are you required to also submit the internal audit report to the regulators, for example, in this case, TRAI? If yes, then
no, fortunately not. Indus Towers is governed by, so we are not coming under TRAI and anybody else. We are governed under a license called IP1, that is Infrastructure Provider 1.
Okay.
So we don't have to report to any external authorities. But yes, whenever there's a requirement, like last year we had a very detailed service tax audit in our company, and they requested us for all our internal audit reports, and we gave them to them.
Okay.
But there's no direct external regulatory reporting requirement.
Okay. Okay. Thanks, Mr. Vinod. There are more questions, but I believe the time is running out. So what we will do, we will share those questions. Maybe you can give in few sentences your views on the same. And,
Sure.
And whenever appropriate, your audit solutions partner can also give their views, because there are some questions on the audit solutions. So on behalf of IIA Bombay chapter and all the participants, I thank you from my heart for taking a wonderful sessions, and we look forward to hear you once again in the future.
Sure. Thank you very much, Manoj and Deval, and thanks to everyone for listening so patiently and coming up with very good questions. Thank you.
Thank you.